Hello traders, this is Chris Buss with Traders Profit Compass with a sector spotlight report on the ARK Invest family of ETFs. It's been a while since we've gone through Kathy Wood's charts, and I thought it was about time that we revisit what she's been doing over there, how her ETFs have been performing, and what we might look forward to in the weeks ahead. I don't think Well, let's put it this way. Before we dive into the charts, I want to take a look at yields. It seems like the last 3 or 4 months, really, the market has been a slave to how the 10-year yield has been behaving. We've seen some dramatic moves over that period of time, and there have been quite a number of whipsaws associated with that. So let's just take a look. I've got a chart of the 10-year Treasury yields here, $TNX. You can probably find that ticker in your charting platform. And you can see we peaked out in March of 21, and then we started more or less a gentle slide to the downside. And then beginning in early June, that downside move accelerated. And what I've got drawn here in the dashed brown lines is just a simple trend channel, a downtrend channel for these yield moves. And you can see that the channel has done a great job in defining that trend, and we've made several visits to the bottom. We had a visit to the bottom here, and here, and you can see that the top side of the channel has contained it on all these bounces. That is until this week. We had gone. This is not last week, but 2 weeks ago. We hit the bottom of the channel, and we had a reflexive bounce back up to 1.3%, where it promptly rolled over again this week until we bottomed out, more or less had a double bottom here at the lows. And then this question mark was posed to the group on Thursday. What was going to happen at this channel resistance line? Was the yields just going to roll over and go back down, or were we going to have a breakout? And on Friday, we got the breakout. We're back up to 1.3%. And the reason that seems to be important is because obviously TLT are bond prices, and they track inversely to bond yields. So since May, we've had a rising TLT, which means a falling yield curve. And so now on Friday, on that breakout, we got a sell signal right here on TLT. And as far as our market keys go, a rising TLT is going to favor those high valuation tech names, the ARK names, the bubble names, mega cap tech names, etc., while a falling TLT would in general favor cyclicals, banks, reopening plays, industrials, things like that. So what I wanted to do is, since the invest theme is in these disruptive technologies, high valuation names. I mean, we all know the story. I don't need to get into it. But if we are truly, in fact, in for a rising yield environment, which means TLT would begin a move down, then that may be a harder environment for the high valuation names to perform. So we're just going to have to watch that and see. So let's get into the ARK family. And it was remarkable to me how similar these charts are, and you'll see that, and I'll point out the similarities, but it's not going to take rocket science. You don't have to be a rocket scientist to be able to overlay these charts and see the similarities. And also, as a reminder, you're always welcome to run these tapes at 1.25x. I don't think you'd miss anything. So getting back to the chart here, this is the FinTech group. And you can see we peaked out in February. That was followed by a pretty fast rug pull down here to this 48. And ever since then, we have bounced at 48 and found resistance at the 55, 50 area. So a trip to the top, a trip to the bottom, a trip to the top. We came halfway, bounced, got rejected again at 55, came down, had a false breakdown. That was a bear trap. And then we recaptured it back up where 55 again proved to be too tough. And now we've found some support here at the midpoint of this box around 51. Now, it wouldn't take much for you to imagine that I could box in this area between 48 and 55. You can see on the indicators that we are rising. PPO is above the zero line, so that's in a bullish regime. RSI a little less convincing, toggling back and forth across the 50, its midpoint line with regularity, but in general it is rising. So what should we do here, or what could you do here? If you're an aggressive trader, the reason I dropped in this triangle is that if price were to break out here, you've got a legitimate chance to come up here to 55, and then that is your layer of or your moment of truth point on this chart, because you can see that going back all the way to March, 55 has been a problem for price. So for me, I don't like taking a long here in the middle. Why? Because there's a good chance you'll either get more whipsaw action below or make a little move up here and then get rejected quickly. What I'd rather see you do, and what I would do, is set yourself an alarm at 55 and set yourself an alarm at 48, which is just below the 200. And then if you're on the daily time frame, what you can do is, if ARK gathers itself and wants to make a run back towards highs, you'll get an alarm here at 55, and then that would be a compelling long when and if it breaks above. By the same token, if everything falls apart, you've got support at the 200 and at 48 on the downside. If you got a break of that, you could get short, and then your last chance, or the last chance for price to save it, would be down here at 45. Another way to play is simply the ranges, which is you sell resistance and you buy support. You can see how well that has worked in the past, where you're just bouncing between 55 and 48. So that's a $7 range, which is certainly tradable. But I think just waiting for either a breakout or a breakdown is the easier trade. When you're in options, time is money. So while you might say, sell resistance, it might take its sweet time moving all the way down. And, how long it's going to take to reach the bottom is certainly up for debate. So, but you can tell, this has been dead money since March. If you've been long all through here, you're probably pretty frustrated at this time because you haven't done anything while the market has made some nice advances. I think going forward here, we're going to be able to pick up the pace a little bit, because you can see that as we move into the ARKG, which is the genomics fund, you can tell, although the price levels are different, obviously, the same pattern has emerged here where we had a high, we came down, we found some support, and then it has just been toggling between 80 and say 93, moves to the bottom, then back up to the top, where it ultimately has gotten rejected quite a number of times. And on the downside here, you can see that price has found support here at 80, and now the 200 is up in that area. I would wait for a breakout above 93 to entertain an idea of a long, which would take you back up towards 112, 112.50, 115, something like that. And by the same token, to get a compelling short, I think you've got to get below or have price break below the 200 and lose this support level at 80. And then if you got short below 80, I think your first stop would be a test of this prior low at 72.50, and then you're down into the 60s. But again, a lot of range bound action in a market where, you know, things have been trending for a lot of other groups and other names. So that's been a tough trade to just sit in. And I think anybody that has been in it for a while has been frustrated. And that may be part of the reason for this level for being such tough resistance. You've got a lot of people that got trapped up here on that fast move. And so now when price makes it back up, you've got a lot of people up here saying, I just want my money back, or I'll take a small loss, but I'm not going to keep holding this thing. And every time it comes up here, price finds a bunch of supply, people selling into that peak, and then they drive it lower. So that's what I would say on the genomics fund. And here again, this is the ARK Innovation. This is their flagship fund. And, you know, if I were to put ARKG or ARKF on this chart, it looks exactly the same as the other ones. And I don't have a reason for that, other than, you know, people getting trapped late. Those late to the party got trapped up here, and now that has formed extra supply here at the top. So on the ARKK, I think you've got to get a breakout above 130 to get some running room, and the bears need to break it below, I'd say, well, I should have had this down a little bit here, this line here. I should have that support level down at closer to 110. So I would say above 130 or below 110 for a short. In between is just going to be chop city, and I wouldn't try to do too much with that. The PPO profile is improving. It's right at the zero line, and just like the other ones, RSI is kind of just toggling, checking and marking time here at the 50 level, not really giving a clear signal. Now, if you were to get a breakout on RSI and a decisive move higher in PPO, you're going to see that in price, and you're going to get that breakout at 130. And remember, the ARKK, that has a lot of Tesla in it, if I'm not mistaken. And I'm not an expert on the holdings of what the ARKK is doing, but if Tesla were to take off, I know it's a heavy weighting, and that may be the catalyst to get a breakout here on the ARKK ETF. But I don't think you're gonna lose much by holding your fire and just setting yourself an alarm here at 130 for the breakout. That way you won't miss it. And while you're in there setting alarms, I would set one at 110 for a downside break if things start to deteriorate. As we move down the list of the ARK family, we're going to hit the ARKQ, the ARKW. We've got the ARK space one, and then we've got the 3D printing. The volume on these following ETFs is really low. Like on this ARKQ, the autonomous, only 324,000 shares traded on Friday. And you can see, just like the other ones, you've got a well-defined trading range here ever since March, toggling between 87 and 77. So you've got a $10 range. I wouldn't even try to mess with it inside the box. It's just been thrashing around, not really providing any direction. I think that's a tough trade to make, especially here in the middle of the box. Now, for instance, it could make a down move, find support around 77, and if you were a motivated bull, that's where bulls should step in, like they have here and here and here and here and here. So you would have the 200 and technical support here at 77 to try along. And if you got stopped out, I wouldn't quit. I'd go the other way, because if you break 77 to the downside, you've got a sizable void below where I think price would move relatively quickly. So in your charting platform, what I'd like you to do is set an alarm at 87 and set an alarm at 77, and that will give you a heads up when price moves to an actionable level. This is the ARK, what do they call it, Web 2.0 or 3.0, or ARK Web. Same thing. I mean, you can see the same chart, and I'm not sure why. I don't know if it's all the same people in the ARK family, but it's definitely had the same type pattern. Here the levels are 137.50 on the downside and 160 on the high side. So in between that, I wouldn't do anything. I think that's just too tough a trade to get a breakout here at 153 and then try to finesse a move up to 160. I think that's too tough a trade. I would just rather wait to see 160 be taken out to the upside, or price lose the 200 on the downside here for a break below 137.50. Now, if you got to move down, just like we talked about on the other one, if you got to move down here to 137.50 and it holds like it has here, 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 and here, absolutely nothing wrong with trying to buy the 200 with lateral support there. You've got a dual level of support with the 200 and 137.50. I think that would be worth a shot to the long side, and maybe you get a move back up to the top of the box. At least you've got at least $20 of opportunity there from, say you catch it at 140, your target's going to be 160. So that's going to offer a really nice risk-reward trade, but not here in the middle. I wouldn't want you to take that trade here in the middle. I think you've got to wait to get to either the top or the bottom of the box. This is the new one. This is the ARKX Space Exploration. And for me, this isn't even really tradable. I'm more of an options guy. Less than 200,000 shares traded. And this whole range here is a little more than $1. So to me, that's maybe interesting to watch and chart, but kind of a tough thing to try and trade, where it's moved plus or minus $1 since April. It seems like the ETF is having trouble getting traction. And speaking of having trouble getting traction, this is their 3D printing ETF, and you can see here only 36,000 shares traded. Hardly anything in the options realm for this product. And given only 36,000 shares, I wouldn't be surprised if they discontinue the ETF altogether. I'm sure it's more, when you're managing 60 plus billion, I can't imagine, this print ETF being anything more than an annoyance. And when you've got a family of funds with that much capital to manage, I can't imagine them spending a lot of time on this one. And price kind of reflects that. I mean, we've got a box here from 41 to 35. Let's just call it 35 here. So if you want to battle inside this box, knock yourself out. But I don't think there's enough liquidity there to even worry about it. And certainly in the options chain, I checked, not a lot of activity. So for me, this is just a no touch. I think you've got to have at least 250,000 shares and some option activity to give yourself a chance of liquidity and getting a good fill. So I would steer you away from this ETF as far as trading. Now, what it will do is give you a good tracking reference. And what I mean by that, instead of keeping track of all the individual names like DDD, 3D Systems, all those individual names, if you check the ETF for the holdings, you'll know which ones are weighted. And then if you set some alarms here, that will be a cue for you to go and look at individual names that you could possibly trade within the group. And I do that quite often with we talked about it, I think 2 weeks ago, with steel, ticker SLX. Instead of tracking 10 or 12 steel names, if you track SLX and you get an alarm on that gives you a heads up that you can go into those 12 steel names and look for setups and opportunities. And you can use this PRNT the same way. Use it as a tracking index, not really a trading vehicle. So anyways, let's do a quick summary here. We know the ARK Invest theme is disruptive technologies, and by extension, there are a lot of new companies here. There are not a lot of profit support, very high valuations, and now we're starting to see a move in the 10-year rates that are moving higher. If that trend persists, that may pose a stiff headwind to the ARK family. Too early to tell. We're just going to have to wait and see. But go back, make sure you set your alarms, because setting those alarms is what is going to make watching these videos actionable to you. If you don't set the alarm, then over time you're going to get either a breakout or a breakdown, and you're going to miss it. So that would essentially make watching this video a waste of time. So go back. If you didn't write down the levels, just backtrack and mark the levels in your platform with alarms, and that way you'll get a heads up on either a breakout or a breakdown and give you a very actionable, objective level to trade against. And hopefully get a trade that will pay for us, pay some bills over at your place. So anyhow, hope you found the info useful. If so, and you're new here, please hit the subscribe button and the alarm bell. You'll get all my content. Also, if you're interested, visit the show notes where there's a link to the blog site where you can drop in your email. It takes 5 seconds, and then you'll get not only an invite to our trading room, but also you get all this content morning, noon, and night delivered right to your email box, which would be awesome to have you be part of the team. And longtime listeners, thank you so much for watching. Hope you found the information useful as well. Please pass the link along to your trading circles and social media circles, and especially to other traders that may find this technical analysis beneficial to their work. So thank you, and enjoy the balance of your weekend. This has been Chris Buss with Traders Profit Compass. Talk to you next time.